Imagine turning 100,000 Kenyan shillings into thousands in passive income with the Kenya's best dividend stocks. I'll show you exactly how much you would have made or have earned if you invested in the best dividend-paying stocks. So today, we are diving into something super practical. How much dividend income would you have earned in 2024 if you invested 100,000 Kenya shillings or 500,000 Kenya shillings in some of the top dividend-paying companies here in Kenya? We are focusing on 4 companies. Number 1 is Standard Chartered Bank Kenya. Number 2 is Stanbic Holdings. Number 3 is British America Tobacco Kenya. And for reasons that I'm going to mention later on this video, we are going to take number 4, Bamburi Cement. These are solid picks known for consistent payouts, and my goal here is to educate you on dividends, show you real numbers based on 2024 data, and inspire you to start investing right away. We are using data from 2024 because the current year, that is 2025, isn't over yet. So we may still see additional interim or final dividends announced between now and the end of the year. So to give a complete annual picture, we are going to stick to the full 2024 payouts while still mentioning 2025 dividends so far for context, okay? But you're going to focus on 2025. We'll do another video maybe at the beginning of the year, that is 2026, so that you can see what you would have expected, or if you invested, how much you would have earned with the dividends for this year. Remember, this is for educational purposes only. If you decide to invest, make sure that you do your own research or consult a financial advisor. Welcome to Study of Wealth. Here we talk all things finances with a bias in investments. Our goal is simple: to achieve financial freedom, having enough money working for us. If that is something that you're interested in, make sure that you hit that subscribe button. And a legal disclaimer: I'm not a financial advisor. I'm just sharing my extensive research and also personal experience in this space to just show you that these opportunities are out there. You can actually take advantage of them, and they're not as complicated as they look, okay? Now, for this video, we start with the basics. What are dividends? So when you buy shares from a company, you become a shareholder. And as a shareholder, when the company makes profit, they usually distribute that money to their investors. Those are to the shareholders, and they distribute them in form of dividends. So you as a shareholder, you get to enjoy the profits that the company have made, right? So in short, they are basically your share of a company's profit paid out to shareholders, usually quarterly, semi-annually, or annually. This is purely passive income. Your money works for you because you're not involved in running the business yourself, okay? So if you invest in Safaricom, it means when they make profit, they distribute the profits to you as an investor, but you're not involved in the day-to-day running of the business or running of Safaricom in this case, all right? So in 2024, these 4 companies paid out dividends, including final dividends from 2023 profits and interim dividends for 2024 plus any special. So for the purposes of this video and the calculations, we are assuming that you invested in January 1st, 2024 at the opening prices. You held the shares all year and you collected all the dividends paid in 2024. I have not factored in the trading fees and the taxes for simplicity and just for the purposes of this video, but make sure that you keep in mind this in real life or when you're investing in shares. I am going to start the calculations by saying this: I'm a very huge advocate for diversification. So we are going to be splitting our investment, that is the 100,000 Kenyan shillings and the 500,000 Kenyan shillings, equally across the 4 companies. Why diversify? Number 1, because dividends aren't always guaranteed. A company might pay very well one year, but skip the next year if performance dipped. And this is the reason why I included Bamburi Cement here, because they paid a massive special dividend in 2024, but none so far in 2025, due to its acquisition and also trading suspension in 2025. And I included the Bamburi here because it's a perfect example of how you can actually get paid dividends this year. But the following year, you either get less, you get more, or you actually don't get dividends at all. And that is the reason why I advocate for diversification. And I think this is a perfect example because it goes to show you that it is very important to keep tabs on the companies that you have invested in. The other reason why I am a very big advocate for diversification is because when you're investing in shares, the prices usually fluctuate. They go up and they go down. So you might end up investing in a single company. You earn through dividends, but lose on capital if the prices go down. Okay, so when you invest in different companies, you spread the risk of losing on your capital. If one company underperforms, the other companies will balance this out. Okay, and I think this is a very good example. Our companies today are very good examples because even for this, we have companies that went up in prices while others went down in prices. And we are going to see how this can actually balance out. And we see that at the end of the day, if you actually sold your shares at the end of that year, you'd have made profit in dividends and would have made profit in capital gains. So I'll be breaking this down company by company, and I'll be sharing their 2024 and 2025 dividends so far. Then we are going to calculate the number of shares you would have bought with the amount allocated, and then the total dividends received in 2024 plus the percentage yield, all right? And we're also going to look at how share prices moved in 2024 to show you how diversification actually helped with capital gains and also capital drops, okay? So we are going to start with the dividends for each company. So first up, we have Standard Chartered Bank Kenya. So in 2024, they paid a final dividend of 23 Kenya shillings per share in May. Those were from 2023 profits. And they also did an interim dividend of 8 Kenya shillings in October. And the total dividends that they paid were 31 Kenya shillings per share. So in 2025, they paid a final dividend of 37 Kenya shillings in May. That is from profit from 2024. And then they also did an interim dividend of 8 Kenya shillings in October, totaling 45 Kenya shillings so far. The share price in January 1st, 2024 was 161.89 Kenya shillings. By the year end, it was around 175 Kenya shillings. That means it went up 8%. Okay, in 2024. Next, we have Stanbic Holdings. In 2024, they paid a final dividend of 14.20 Kenya shillings in June. Those were returns or profits from 2023. And they also had an interim dividend of 1.84 Kenya shillings in September. That is a total of 16.04 Kenya shillings per share. Okay, so in 2025, they paid a final dividend of 18.90 Kenya shillings in May. That is, those were returns or profits from 2024. And they also did an interim dividend of 3.80 Kenya shillings in September this year, a total of 22.70 Kenya shillings for 2025 so far. So the share price start of 2024 was 108.77 Kenya shillings, and by the end of the year, it climbed to about 125 Kenya shillings. That is a 15% gain. Now, the British America Tobacco Kenya, that is BAT, in 2024, they paid a final dividend of 45 Kenya shillings per share in May. Those were profits from 2023, and they also did an interim of 5 Kenya shillings in September, totaling 50 Kenya shillings per share in 2024. So in 2025, they paid a final dividend of 45 Kenya shillings in May. Those were now profit from 2024, and they did an interim of 10 Kenya shillings in September 2025, a total of 55 Kenya shillings so far. The share price for this stock was, in January 1st, 2024, was 407.67 Kenya shillings, and by the end of the year, it dropped to about 350 Kenya shillings. So they experienced a loss of 14% that year, that is in 2024. Now, we go to Bamburi Cement, which is last but not least. So in 2024, they paid a regular dividend of 5.47 Kenya shillings per share in July, and they had a special dividend of 18.25 Kenya shillings per share in September from the asset sales, totaling 23.72 Kenya shillings per share. So in 2025, no dividends have been announced so far for Bamburi Cement. Likely, I think this is because of the company's acquisition, and the share price on January 1st, 2024 was 35.89 Kenya shillings. By the year end, it rose to about 55 Kenya shillings. That is a 53% gain. Okay? Now, I want you to see how diversification helped here. Bamburi and Stanbic posted strong price gains, while Standard Chartered grew modestly, but BAT took a hit. We are talking about 14%. And by spreading your investment across the four companies, the gains in the two companies that did very well offset the BAT drop, the price drop, and by this, you can see that this stabilized the portfolio, and we actually made some gain, and we collected the dividends. But imagine if you invested all the amounts in BAT, you would have made a loss of 14%. Of course, you would have made money from the dividends, but it would have not recovered the whole amount that you would have lost from the capital loss, okay? Now, let us quickly go through the calculations. And because we have laid everything out, we're just going to replace the numbers. So we are going to be dividing our 100,000 Kenya shillings divided by four companies, because we are splitting across the four companies. So we are investing 25,000 Kenya shillings in each company. Then for our 500,000 Kenya shillings divided by four, we get 125,000 for each company. So we are going to start with Standard Chartered Bank. So our 25,000 Kenya shillings divided by the price, which was 161.89, we get 154 shares. We multiply that with 31 Kenya shillings, which was the dividends for 2024. We get 4,774 Kenya shillings. For Stanbic Bank, 25,000 Kenya shillings divided by 108.77, we get 230 shares. We multiply that with the dividends, which was 16.04. We get 3,689 Kenya shillings. For BAT, 25,000 divided by 407.67, we get 61 shares. We multiply that with the 50 Kenya shillings dividends, we get 3,050 Kenya shillings. For Bamburi, we take 25,000 Kenya shillings divided by 35.89 Kenya shillings. That is the price. We get 696 shares. We multiply that with the dividends given, which is 23.72. We get 16,521. So the total 2024 dividends is all the amount you earned if you invested the 100,000 Kenya shillings in these four companies would be about 28,034 Kenya shillings. That is an average yield of 28% in dividends alone. We have not factored in the capital gain. This is in dividends, 28%. So for 500,000 Kenya shillings, this is 125 Kenya shillings for each. So we start with Standard Chartered Bank. So for Standard Chartered Bank, the 125,000 will get you 772 shares. When we multiply that with the dividends, we get 23,932 Kenya shillings. For Stanbic Bank, 125,000 will get you 1,149 shares. When we multiply that with the dividends for that year, we get 18,432 Kenya shillings. For BAT, 125 Kenya shillings would have gotten you 307 shares. When we multiply that with the dividend for that year, we get 15,350 Kenya shillings. For Bamburi Cement, 125 would have gotten you 3,482 shares. We multiply that with the dividends, and then we would have gotten 82,606 Kenya shillings. So the total amount you would have gotten for investing 500,000 Kenya shillings across the 4 companies would have been 140,320 Kenya shillings. And the yield is the same, which is 28% yield. 28% is a good return. And sometimes there are people who invest specifically for dividends without focusing on how much they are gaining in terms of capital. I mean, if you invested 125,000 in Standard Chartered Bank, you got 23,000 Kenya shillings that year. This year you have already made 34,000 Kenya shillings because they have given a dividend of 45 Kenya shillings. So this means you can actually invest for dividends. You can invest in companies that give good dividends, and then you rely on the income from the dividends without necessarily thinking about how the price of the shares is performing. So long as the company is in profit, you'll be making money with the dividends, okay? That is the key takeaway from all this. And now imagine if you continue reinvesting the returns. I think that will be our next video, how we can actually reinvest the returns that we are getting from the dividends, okay? How we can actually reinvest the returns that we are getting from the dividends. Think about it. I think this is my dream. This is my dream to actually get here one day to make sure that I'm earning from the dividends and making passive income and reinvesting that money back to the these dividend-paying stocks, okay? And to actually reinvest back to these dividends-paying stocks so that we can build a passive income, consistent passive income. And if you're interested in understanding how to invest in the stock market, or you don't know where to start to invest in the stock market, I have a guide for you. Make sure that you get a copy of this guide. I'll leave the link in the description box and also in the pinned comment. Get yourself a copy and start investing right away. We move towards this reality. We move towards investing in stock market that will be paying us dividends for passive income, consistent passive income. We make the dream a reality. If this helped, make sure that you give this video a thumbs up. Comment below which stocks would you pick, or which is your dream stock among the ones that I have mentioned. And if you're interested in investment with lower risk, make sure that you watch this video on Mansa X, a complete breakdown on Mansa X. Bye. Happy investing.